Every beginner enters Forex with the exact same illusion. You expect to open a laptop, stare at a 1-minute chart, click a few buttons, and walk away with fast cash. They call this day trading. It looks exciting on social media. But behind the flashy edits, it is a psychological slaughterhouse. When you trade ultra-low time frames, you aren't trading against human beings. You are competing head-to-head against multi-billion-dollar, high-frequency trading algorithms. These neural networks are designed to hunt your retail stop losses in milliseconds. You are bringing a knife to a laser fight. Day trading doesn't build wealth. It exploits your biological desire for fast dopamine and converts it into psychological stress. Let's look at the math. Your favorite trading guru deliberately hides from you transaction costs. Day traders typically open and close 5 to 10 positions every single day. Every single time you enter a trade, you pay a spread or a commission straight to your broker. If your average spread is just 1.5 pips and you take 200 trades a month, you are paying 300 pips directly to your broker before you make a single cent of profit. You are running on a financial treadmill. Now, look at swing trading. A swing trader takes maybe 5 to 10 trades a month, holding positions for days or weeks. Their transaction costs practically zero relative to their target profits. Swing trading lets you keep your hard-earned money instead of donating it to the broker. Why is day trading so unpredictable? For a beginner, it comes down to market noise on lower time frames, minor bank institutional orders, random algorithms, and minor economic data releases create violent price spikes. It looks like a trend, but it is actually pure, unreadable chaos. When you zoom out to the daily or 4-hour charts used by swing traders, that entire storm completely disappear. You finally see clear market structure. Central banks and global institutions do not move multi-trillion-dollar currency markets over minutes. They move them over weeks and months. Swing trading aligns your capital with the actual, undeniable gravity of global macroeconomics. The greatest threat to your trading account isn't the market makers, it's your own biochemistry. Day trading triggers an intense fight or flight response. When you lose a trade in 3 minutes, your brain interprets that loss as a personal attack. It demands payback. This triggers revenge trading. You double your lot sizes, you abandon your risk parameters, and try to win it back instantly. Your account dies, a death of 1,000 cuts. Swing trading completely breaks this loop because you analyze the market once a day. After the daily candle closes, you make decisions with an icy, logical mind. You have hours, sometimes days, to precisely calculate your risk and plan your invalidation levels. You delete panic from your execution. Ask yourself, why did you want to get into Forex in the first place? You wanted freedom. Yet, day trading quickly transforms into the most toxic, high-stress, 9 to 5 job imaginable. Except, in this job, instead of getting paid a salary, you can actually owe money at the end of the day. You become a psychological slave to the London and New York session opens. Swing trading fits around your lifestyle, not the other way around. You can easily keep your full-time job, focus on your career, and look at the charts for just 30 minutes every evening. You set your orders, you let the macro trends do the heavy lifting, and you go live your life. If you want to survive your first 12 months in the Forex market, stop chasing the seconds, start mastering the days. Here is your foundational swing trading blueprint using pure price action. First, open the daily chart and identify the long-term trend. Is the market putting in higher highs and higher lows? That's a bull market. Second, plot your key horizontal zones of support and resistance, the major structural areas where historical price has aggressively bounced. Third, be patient. Wait for price to pull back into those exact zones and show a clear rejection candlestick, like a pin bar or an engulfing pattern. Set your trade, define your structural stop loss, and turn off your screen. Stop watching the noise. Master the swing. The house always wins if you play by the rules. Stop donating your capital to the brokers on the 1-minute charts. Protect your equity and learn how to trade with the actual gravity of the macro trends. Because if you don't change your time frames, this is exactly why beginners fail. You don't need more indicators. You need more patience. The market noise is designed to wipe you out, but the higher time frames are where the smart money hides. If you're ready to step away from the chaos, hit that subscribe button. Share this with a friend who is still blowing accounts on the 5-minute chart.